Hey everybody, real, real estate ninja here. Man, I'm gonna get that snap thing down. You know what? The economic ninja doesn't own that snap thing, just so you know, okay? So everybody, I'm the real estate ninja. I've got an interesting story for you today out of Yahoo, and I'm gonna be linking it below. And what it's about, and this is really interesting, housing market extremely volatile with private equity accounting for a third of the sales. Now, we've talked about this before, and I've actually heard the economic ninja talk about this, and it's not like he owns all the news, but you know, I've heard people talk about BlackRock and how these big funds are buying up all the houses, and they are. They're buying up a ton of houses, but I've said it before and I'll say it again. The bigger they are, the harder they fall. And there will be a time, because these funds are run by human beings, where they get fearful and they sell properties or they stop buying them at the pace that they've been buying them at, okay? So people have this doom and gloom when it comes to real estate, and I keep saying, don't worry, the sun's gonna come out tomorrow. Well, Andy said that. But anyway, point being is that there's going to be another cycle. It's going to revert to its mean, and we're going to be able to take advantage of this, all right? So here we go. It says right here, inflation and recession fears turned once a red-hot housing market into a cool down. Fluctuating mortgage rates dropped below 5% and then up again, with the rate on the 30-year fixed mortgage at 5.2%, up from 4.9% the week prior. Says housing used to be a very stable asset class, and now it's extremely volatile. Glenn Kelman, CEO at Redfin. Now, I want you to realize, a year and a half ago, Redfin was talking about, got green baby, buy, because that's what their company makes money from, right? They also make money from sales, obviously. Anytime real estate's moving, they make money. But they make more money when real estate is hot and people want to buy it, right? Not when people are offloading it. They still make money, but not as much, right? So they were talking about how awesome it was and that this time is different. And now it's interesting that the CEO of Redfin's coming out and saying, yeah, not looking too good now, and it's gonna get worse. He literally said that in an interview, and I want people to realize that, okay? For what, a year and a half now, almost 2 years now, I've been talking about this. Wait a minute, I heard the economic ninja talk about it. But my point being is that it's turning, and this is an exciting thing. We're gonna be able to take advantage of this. Now, we still have a long way to go, all right, until we hit the bottom. But there are gonna be deals coming out, because people in their minds are gonna start saying, we gotta get rid of this dying asset class. Trust me, that's gonna be in the narrative in a year. It says Redfin analysts showed that real estate investors bought 18.4% of homes sold in the fourth quarter of 2021, and this was up from 12% a year earlier. This year has been what some experts have called the worst housing affordability crisis, with many entry-level at the first-time buyers pushed out of the market. And that is true. A lot of people that decided they want to finally buy a house, they got pushed out so recently in the last 6 months, because the home prices kept rising and the interest rates exploded. Literally almost, they did pull off a 100%, a doubling of what they were from last November and December. So they just got completely pushed out. For home buyers wondering why it's harder to win a bid, it may be something to do with the fact that they're not bidding against another family, but instead an institutional investor. Now again, institutions are coming up and buying things up. Why? Because they're starved for yield. They're trying their hardest to gobble up all of the real estate they can at a good enough price to where the rents make sense. But the problem is the rents are getting so high that pretty soon you're going to start to see people not paying their rents. When institutional investors buy and sell properties, the mindset is different from a traditional home buyer or seller. An iBuyer is going to price ahead of the market and market down every week until it sells. Makes the market more like the stock market, more volatile, more up and down, Kelman said. Again, CEO of Redfin. If you've lived in a house for 30 years and raised your kids there, there's no way you're going to market down after 2 weeks on the market. The strategy of a private equity and REITs, which stands for a real estate investment trust, has caused a reduction in home prices, especially areas that received a pandemic boom from domestic migration due to the ability to work remotely, like Boise, Salt Lake City, and Denver. So what they're talking about is these institutions that bought up all this real estate and now are looking to offload it, they have no conviction, it's lack of terms, best, emotion tied up in this, right? So they go out and they sell something, and they put it on the market for, let's say, 500,000. It doesn't move in a week. Boom, market down 10%. Boom, we're here to close. We are here to offload this real estate. And I want people to understand how big of a deal it is. It's really neat when you go to buy foreclosures because there's no emotion in it. Again, you're dealing with a bank that has never lived in that property, never even seen that property. They're here to move units. And I bought foreclosures, and I love buying foreclosures because it's all nuts and bolts. It's all just numbers, and very easy. We don't have a bunch of back and forth in negotiation. Well, the thing is right now what you're going to start seeing, you're going to see it accelerate into Q4 of 2022. These funds are going to be liquidating properties, and they're not going to care. They want to sell them, and they want to beat you out as a personal homeowner. Let's say you bought a home as a rental property. You're like, the market's getting frothy. I want to sell it and try and take advantage of this crash and rebuy later. These funds are going to be marking down as fast as they can until they get to that point where we're going to be losing money. And even then, there are certain acceptable losses that a fund will take way over what a normal person would take. So you're going to see this accelerate going into the Christmas season, and it's going to be something to really, really neat to see. Now, quite frankly, just a little tip, I'm not going to be a buyer until I see prices come down below the 2019 levels, okay? We're going to see this bubble that was exploded come down. It should go well past its 2019. And that's only, I would be a buyer if interest rates don't change from here. Or let's say they get up to 6%. I'd be a buyer at 6%. But if I feel that the Federal Reserve is going to raise rates well into the double digits, which I actually do believe as of right now they're going to, without crashing the stock market, and when I say double digits, I'm talking about mortgage rates, not the Federal Reserve, the Fed's funds rate, right? So if the Fed funds rate runs up to 4% and all of a sudden you see a 10% mortgage, which can happen. It sounds crazy, but it actually can happen. All bets are off. We're going to see real estate really, really come down because affordability will just not be there. All right, guys, I'm going to link this story below. I thank you so much for watching. If you're new to the Real Estate Ninja, hit the subscribe button because we are going to be documenting this crash. And the Economic Ninja said it was okay if I just do all the real estate stuff because, I don't know, I guess maybe you trust me. I don't know, it's sort of a big deal. Whatever. All right, guys, with that being said, I don't know how to do this. Real Estate Ninja's out.